Hey team, Sean from Rest to Live here. I was just actually out having lunch with my wife. I have the day off today. I had some stuff to do early this morning, but I've got the rest of the day off. So actually just taking a minute here to reflect on some things a little bit earlier in my career around finance, around some early interactions with wealth and wealthy people. And I also want to talk about wheat just a little bit here because I think it's a really important topic to understand how commodities work and some of the things I'm generally seeing and the effects it can have long term in the markets here. So, look, without wasting any time, I'm going to jump right in as usual. Um, I can remember, and I'm seeing the reason I was really motivated to start talking about this was um, I see a lot of stuff on YouTube and Twitter about what people are trying to 10 and 20x. They're all trying to flaunt what they have and the cars and the stupid stuff. And I'm not saying everybody does this, but you do see it a lot. You see it a lot on YouTube, I think, too, because it's very easy to get followers to watch your stuff when you're talking about things and experiences and cool pictures and wannabe Lambos and stuff. So I want to tell you a quick story. So after I had sold my business in my early 20s, I got a job in commercial finance, and I was working as an originator in and around mezzanine debt, commercial style finance. And we were working a bunch of projects in the Boston area. One day, a guy pulls up. He's in like head to toe, like Kmart Russell Athletics, green sweatpants, green sweatshirt. I should probably tell you the dates. Now, let me think about this. Must have been around '06, '07 timeframe, maybe a little bit earlier, maybe '05, but in and around that time frame. Walks in, much like me, not clean shaven, just kind of looks like a mess, old sneakers, stains all over the stuff. And I see he parked out front in an absolute crap box, really old F-150. I drive an F-150 too, but this was a really old one, even for that time. And everyone in my office, all these pretty big commercial guys were coming out of the woodwork to come out and see him. With the attorney in the office came out to say hello. And I kept thinking, like, what am I missing? He must be related to someone. He must know someone. There's something here that I'm not aware of. Because, like many people, there's this perception that someone who has power or wealth or the ability to act on that is going to come in and look the part, right? The shirt and tie, the fancy clothes, the cool car, the watches, everything else. And I'm listening to the conversation, and one of the guys said, "Hey, Sean, do you want to go for a ride and check out what he's working on?" At this point, I'm thinking like, okay, yeah, he's probably in construction, doing some kind of a project or a build in the area. I work with a lot of commercial work, so I think that was sort of the idea. So we're driving over, and the guy driving me there, of course, is in an Escalade, right? And I remember thinking like, wow, this is really cool. This would be great to have this someday, right? And I was already had done pretty well at this point. I'd sold my business. I was already into real estate. Really had been investing for a long time at this point, but still, right? Like there's a certain look or feel to it. We get there in these brand new huge condo complexes, and we're talking about in actually the city of Boston, not the suburbs. So you have to understand, like buildings like this, we're talking tens, if not hundreds of millions of dollars. Okay. So we go into the building, we're looking at some of the stuff that's already been completed within the building. They've got some units that are ready to roll. It's a mixed use project. So there was some retail, some restaurant, et cetera, some residential above. And we're walking around, and I'm talking to the guy, super friendly guy. And I was like, oh, are you the builder? Or are you designing the building? What's the deal here? He's like, oh, I'm just here to check on some things. I'm not really working on it today, right? And we have a good conversation. Super nice guy. One of those folks who's like, hey, if you're interested in real estate, let me know. Love to teach you more about it. And I'm like, yeah, that's great. And like, I'm a really easygoing guy by my nature, so I'm like, I'd love to learn from everybody. I don't care what they do, how they do it, anything like that. So I'm like, yeah, sure, I'd love to get in touch with you. We get back to the office. He's left to go do his thing at this point. I'm talking to the boss in the office, and I won't say the guy's name, but he says, "Hey, he's coming here because he needs financing for his next project." And I said, "Oh, what's he in?" And he's like, "Well, he just finished the building that he owns there, so he's getting ready to buy another couple of buildings, and he was doing a lot of work around Boston Common, which is super super expensive, as well as the South Boston Southie area. If you're not from that area, I can assure you it's very very pricey." And the reason I share this is his net worth, including liabilities at that time, because we ran a lot of paperwork on it. And of course, I'm not sharing anything here. There's nothing you could look up to know this. But he had a net worth, including liabilities, of over $40 million. And this is now about 14, 15, maybe 16 years ago now, at the time that I'm typing this or recording this, listen to me talk about a typewriter. And I remember thinking like, wait a minute, hold on. $40 million is a lot of money. And, he's essentially wearing like $6 worth of clothes, driving at best a $4,000 beater. And holy moly, right? And it's very similar to the way that I do things, where I don't have any concerns with how I look, what I wear, what anyone thinks of me like that. I just think that the knowledge, the way you share it, and the way you interact with people is worth a lot more. So I want to share this story because I think you are probably surrounded by a lot of people in your life who have means, have knowledge, and have expertise. And I think when it comes to things like investing, whether it's equities or stocks or real estate, or bonds, or just buying your first personal residence, etc. I think there's a lot of things you can learn from it. And I also think that there's a lot of moments you can take to understand that, like when you're trying to get started in investing, looking for that first job, trying to learn about buying a real estate investment property, right? Or just in general, you want to start a business and need a mentor or some advice. I bet you're surrounded by so many people that you wouldn't think twice, that know a lot about it. And my sort of point of encouragement here is, studying the markets, learning technical analysis, watching educational videos on these topics. That's great. But yeah, well, I mean, I don't have any idea, Crispy, who Anna Delvey is, so please fill me in here in a second. But I think that we work within this idea of like social networks, network effects. We have LinkedIn's, we have YouTube's and Twitter's. And it's like, how often do you go out to that sort of connections you have, honestly, and say like, hey, I'd love to get into real estate. Does anyone have expertise? Would jump on a phone call for an hour, explain it to me. And I think you'll find that a lot of people do, especially entrepreneurs. By the way, if you're trying to start a business or get rolling with a business, there are so many entrepreneurs out there who literally not only would love to see you be successful, would love to mentor you, and a lot of them actually will probably finance you as well. I'm going to end it there on the point of the wealth, the conversation there, because I really think that you got to step back sometimes and realize it's oftentimes the folks who have it that don't want anyone to know they have it, right? There's a big gap between, fake it till you make it, because I want to have a big house and 2 brand new cars, and I've got so much I don't care at all what you think of me or how I dress or what I drive. The next point I want to touch on real quick, because I feel like Bloomberg has been running nonstop on wheat and commodities. And my fear is that a lot of people don't actually know what this means or quite understand how the long-term effects can hit the markets. Oh, yes, Chris, thank you. As soon as you just typed that, I know. Yeah, that's like ultra fake it till you make it. But yeah, I don't. There's no good way for me to say it. But I'm with you. Like, assume nothing in the worst. I wear a coat all the time. I'll give you 30 seconds off topic. I wear a coat all the time that has a hole in the side, but it's a comfortable coat. I don't wear it like to go anywhere, just like going down the street and get coffee and stuff. And someone had made a comment to me like, "Oh, are things going okay?" And I was like, "Yeah, things are great. Why? What's the matter?" And they're like, "Oh, just looks like tough times." And I got home and I was telling my wife about it, and she was like, "Well, yeah, people probably think like you're in real financial trouble because you've got this old coat with a rip on it." I'm like, wow, it's funny. You have those moments of perception where you're like, that small thing, like a tear in a coat, would make someone think like, wow, it's really spiraled out of control, or they're not doing well, or something's going on there. And of course, like, I don't, does bother me or anything like that, but I just think it's so interesting how people go out and buy a $300 or $400 coat, but they won't invest $300 or $400 into an index fund, an ETF, or even education or something like that. It just really, really creates a moment of perception. What I want to talk to you for a second is specifically wheat and a little bit about commodities and the way you have to start to think about the long-term ripple effects of what's going on. Full stop here for a second. The situation in Ukraine is abhorrent. Absolutely, there is nothing at all more important than human lives and the lives of all these people who have done absolutely nothing and are watching things be destroyed around them. There isn't a but, a comma, however, and or. Full stop. It's abhorrent. It is just a disgusting thing that's happening, period. One of the consequences that is not as important or even in the same realm as human life and safety and humanity is food situation that's coming out of this that we're learning about that I don't think a lot of people are also quite understanding. And I don't mean just from an investing perspective, but in learning about macroeconomics and the way macroeconomics work. So, Russia and Ukraine are major producers of wheat. Wheat is a commodity. A commodity is something that is typically traded on the futures exchange, where, in essence, let's say you own, let me give you a good example. You're in the business of owning airplanes, right? You own a small air fleet, and your margins are really thin, and you calculate your margins based on gas prices. If you know that gas costs, I'm just going to make up a number, $5 a gallon, and you know that at $5 a gallon, what's up, guys? Oh man, this is now I feel like I've achieved fame with these two guys over in the chat. Assuming you know at $5, you can calculate your expenses long term, and you know what those margins are, and you can define your long term path, stay in profitability, all of the accounting you need based on that $5. That's great. But the problem with prices for things like energy, commodities, etc., is they can be all over the place, right? So the big call out is the futures market exists in truth for users of commodities to be able to plan their costs, right? That was the design here. I want to be able to buy a contract that says I will pay for gas at $5 per gallon, right? Whatever it is, this far into the future and at this date in the future. And it means that I can plan ahead. I can tie my accounting to my operations. Now, on the trading and investing side of the house, what people do is they speculate on these prices. This is why those prices tend to move up and down, right? It's things like food items like wheat and corn. It's energy, oil, gas, natural gas, etc. It can be gold and silver, right? These are commodities, metals, copper, aluminum, etc. Some of them are really important. They're all important, but some are extremely important, right? So in the case of wheat, wheat is grown in lots of places in the world, but 30% of the total global growth is in Russia and Ukraine. And I'll stress this again. This pales in comparison to the abhorrence of loss of life. But it's an important fact to know that this is an area where wheat is grown. So one of the things we're seeing is the price of wheat is skyrocketing right now. Wheat is used in like everything, right? You don't always think about this because you buy bread off the shelf, or you buy some food item, or you order something at a restaurant. You may not be thinking about the core ingredients that go into it. But things like wheat are in a lot of stuff. So we start watching the price of wheat go up, and at first you think nothing of it. Like, it's a commodity, it goes up. I don't know anything about it. It doesn't seem like a big deal. Because right now the issue is they can't get the wheat to be transported. But what starts to happen then, we don't have anyone to go and harvest the wheat, and then we don't have anyone to plant new wheat. And then that wheat isn't being harvested because it was never planted. So now what happens is the availability of that wheat is getting less and less in the market. Other areas have to now produce more, which sometimes they frankly can't, just to be totally fair. There are limitations to what farms can do. And especially 30% from a global macroeconomic perspective, that's significant. Like, 30% is a lot. Like 1%, I'd be concerned. 30%, that's a real thing. And we're going to see two things come from this long term that I think are important to understand, not just as investors, but as human beings who are living, in dealing with these things. There are always a concentric effect where you drop the pebble in the pool and the ripples keep going and going and going and going. We're only seeing the first ripple here. We're seeing the slowdown of production, the inability to transport, the risk on those commodities globally. We see it first, though, in the price, because the futures markets act very quickly. They act based on real-time news. And so you'll start to see the price increase, right? Because of scarcity, because of concerns about transportation, because of the ability to harvest and grow more, okay? Here's the deal. What happens next is it creates a strain on these other farms, right? And Chris, I'm going to call that out in a second, actually, because I think this ties in your point about speculators and holding onto these contracts long term. So what happens is next is we start to see the price of food items go up, right? It sometimes is very small at first, but we're seeing it at the pump right now, right? We've had a slowdown of oil and energy because of supply chain issues with shipping. So we're seeing that we're paying more at the gas station, right? We know that inflation is way up as well, which isn't helping anything. Now we've got wheat, yet another commodity that's going to get even harder and harder and harder to deal with. we have to understand that these are long-term effects, right? Like you miss a season or two, you don't make up for a season or two. So as investors, as people who are planning our financial futures, as people who are looking at our own budgets, you have to understand this is where you have to start thinking about the fact that you're paying more at the pump. Generally, life is costing more with inflation as it is, but now anything with wheat could be more expensive. This means restaurants have to charge more because it's harder to get supplies. This means those items that are pre-made with wheat in them are going to be more expensive to work with. This can mean more scarcity. This can mean just in general more expensive things sitting on the shelf at the grocery. So this is why commodities are so important. And I really want to double down on why I mentioned this because if you watch Bloomberg, which I do all the time, right? Every couple minutes on the bottom, we're looking at commodity prices and there's breaking news on commodities. There's always talks about commodities. Commodities are huge, huge deal. I'm not saying you should be trading futures. I'm not saying you should be even being involved with futures. What I'm saying is if you're a responsible investor, growing your personal wealth, trying to figure out what and how to protect and hedge, etc., you got to know this market. Commodities are a major, major thing in the world that we live in. You need to be able to look at commodity prices, tie them into the larger global infrastructure, and look for opportunities there within. Because when you have days where stock markets go down and you're scratching your head saying, well, geez, what the heck? I thought the jobs report was great. Shouldn't this be good for the environment that we're in? Sure, jobs report is great. But man, guys, this is so much worse. Like, you have to plan and understand all these things. So, um, hey, Brian, thanks for posting that. Yeah, and NTR has been a big gainer for the last 12 months. I'll speak to that in a second, but I want to call this out too. Like Chris made the point here that speculators are probably buying and hoarding wheat, and obviously as supplies dwindle, they'll sell it at marked up prices. I think the problem here is, in theory, when you buy a wheat contract, it's with the assumption that the contract's going to be fulfilled. That's the bigger concern. From a speculator perspective, the issue is from an operational perspective. You're buying that future to guarantee that pricing. What if you can't actually execute on that and get the wheat delivered, right? Because in truth, this is about delivery oftentimes. So there's something to be considered there as well. From the speculator perspective, of course, they're going to be rolling these prices indefinitely, right? They know they're going to go up, so you're going to see massive positions taken in commodities. And commodities trade in big, big money. This is not a game for the average retail investor. I touch futures occasionally, but only as a hedge. I don't play or trade them. I certainly don't speculate on futures. It's just, it's not a place I'm comfortable enough doing it. I'm just following the chat here. On top of inflation, would you say that commodities can provide a window into potential? Oh man, great question, Jabari. Great question. So I actually answered it before I read it, but I want to speak to this. Commodities are an indicator that, in the style of analysis that I do, I'm not a big technical analysis guy by my nature. I like to look at the global markets, and I like to look for big trends so that I play a trend game in the way that I invest typically. It doesn't mean I don't do trading occasionally and stuff like that, but the reason I need to understand the commodity markets and the reason I pay attention to them is this is how I build my hedging strategies. If I take a very large position in an, I don't know, pick a growth stock, right? We all talk about Palantir. Take Palantir, right? I take a really big position in Palantir. It's because I'm betting on the fact that we're going to see more AI leveraged to more commercial companies, leveraged to more data, because we're looking at the economy growing, capital is accessible, more businesses are starting. They need to perform analysis on more data, right? So that's really my growth opportunity. Sometimes what I'll do is I'll look to see how we're trending on the commodity front, both from a currency perspective, so I can decide if it's easier to buy and borrow here versus somewhere else. And I can also generate money through things like carry trades on the Forex side of it. But when you track things like the price of metals, the price of food, the price of other commodities, it starts to provide a big, long-term window, because you can go and look at far out contracts to see what those prices are looking like. It really is like a cheat code. It's no different than when everybody thinks about like a leap option, right? Leaps are a long-term option, right? A couple of years out. If you can see huge amounts of volume building down the road, you have to start scratching your head and saying, geez, I wonder why someone is betting that, the price of this is going to be twice as much in 4 years, right? This happens all the time in the stock market. Futures market's not much different. I want to start to get a feel for, who is buying these way out into the future and why do they think this is going to be the case? What's the thesis? I then will do all of my research on why that thesis would make sense. I always, of course, will come back and try to question my own thesis on that follow-up as to why I think I'm wrong or misunderstanding it. So just to that point, I think that's a great question, because so many of the folks we sort of talk to about investing and trading, we're so focused on U.S. stock markets. we miss the boat on everything. I primarily actually only am awake and working during Asian markets. So I know the Asian markets like the back of my hand. So a lot of times on Twitter, I post about the US market futures because I'm paying attention to US futures during the Asian trading. So it helps me to decide pre-market or right at the opening market what I need to do, etc. The sun is hitting my screen, so I'm having trouble reading what's on it here. Um, Remco, I'm gonna talk to that in a second too because I think it's great. Um, McDonald's for Valentine's Day. Ask my kids; they know that's true. Like I think that this is true though. Is we're built, surrounded, and consistently told that success is defined by how quickly we can go out and lease a brand new Mercedes, and then lease a BMW in the driveway next to it, and get as big a house as possible, even if it means I can't afford to eat anything but McDonald's for Valentine's Day. Because as long as I look successful, then damn man, I must be successful. And I'll tell you what's scary is like the idea of the fire movement. I think really has come from this, right? Like this whole movement of especially folks in tech. I know a lot of us who talk on here, we work in and around data analytics, tech in general. I think for a lot of folks who, they go to school for programming, engineering, they're hands on keyboards, eyes on the screen all day long. There's a feeling of like, I'm not having an impact on what I'm doing. I don't care about having the newest pair of shoes, hat, and car. I just want to be able to do what I want to do, relax and chill. So I think that all of these things go into the point that every time there's a blip on the radar of stress, it causes prices to go up. Every time there's an issue with something from a global economic perspective, it hurts the regular people. And that could be absolute atrocities like what's happening to the people in Ukraine, and it can be as minuscule as having to pay 10% more at the pump on a consistent basis, ongoing. I don't talk politics on this channel at all. I have no interest in doing that, but I will say it. If you've been around long enough, like me, and you can remember when gas prices were less than $1, which scary enough doesn't feel that long ago, as I said that out loud. But I think what gets scary is you start to realize, every time we hear a politician come out and say, "Hey, don't worry about it. We're going to get those prices down." What you don't realize is, yeah, like it was at 3, now it's at 5, but they're going to get it back to 4 because they really care about you. And it's like, well, what the hell happened to 3? I want to get back to 3. That's the numbers I need. And this is the perpetual scaling up, right? We go up 2, but we drop down 1. We feel great. We go up 2, we drop down 1, and before you know it, we're double what we were paying for everything, but never felt like it because it's okay. We'll just work an extra hour every week or an extra 20 minutes every day or whatever the case is. So, my goal here is not to go into a diatribe about my beliefs in politics, work, labor, and inflationary pressure, but I think it's just an interesting point that this is why, and I'm getting this from the comment here, like this is why, Remco, to your point, when we're looking for these companies that are trying to get both asymmetrical returns to our portfolio so we can reap the rewards of it, we're also trying to get into these things early, recognize what that future holds. One thing that I almost never talk about, and now I'm way off the track of what I was going to do in my live feed today, but I'm going to keep going. I don't even know if I want to. I'm an algo trader to some degree, right? I write up my plans for how I look at and find strategies, and I look at a company like a Palantir with that heavy ability to aggregate data in real time. And one of the things that I'm really, really starting to think about is how I can leverage more of that real-time aggregation to derive, predictive or prescriptive scoring in and around the data as it comes in, not necessarily in like a HFT style trading or high frequency trading based on algorithms, but more so I can have like a vision of the market for the opens of the next market, right? I'm watching the Asian markets. I want to see the European markets. I'm watching European markets. I want to see the US markets, et cetera. And let's let that keep rolling as information comes in. So I don't think we've seen a lot as far as like what we're doing in financial services in and around data, in and around analytics, in and around trading in general. And I think the reason is the firms that are doing it have absolute brilliant people working for them. I mean, like, this is why you see the MIT and Stanford geniuses running these firms very quietly. But I think that as more of these solutions come to the market, and I'm not talking about, simple phone apps to look at trading, right? I mean, full integrated, deep learning, machine learning on real-time data coming from the markets, coming from multiple markets, right? How do we start to understand in real time, what's the correlation or what kind of variable statistic correlations do we have between commodity prices, stock movements, and early warning signs of when they're going to shift gears, right? You overlay that kind of data and analytics on top of a standard TA technical analysis of like an exponential moving average or standard moving average, etc. You start to really play with those numbers and get a feel for where it's really helpful to get that advantage. I know that I could talk all day about this, but I actually have to get the kids off the bus in a minute here. So I want to end with this point because I think it's really important. This note of how we think about these companies like a Palantir, how we think about commodities, how we think about that macro environment, and how we think about getting and lifting ourselves out of tough situations, and recognizing that a new $400 coat in BMW doesn't really matter. I think the point I'd really get here is for anyone who's watching this, and I hope people are, look for the edge, right? If you can find a statistical edge by learning about commodities, by keeping an eye on what happened in Asian markets the night before, anywhere where you can find an edge, I think there's a massive experience. And hey, Chris, yeah, so you know what? This is maybe worthy of, maybe this is a conversation you and I could have more of an interview style, because I'd love to go deep with it with you. I think that there is enormous isn't even, I can't even put the right word around the arbitrage opportunity to be able to leverage data in real time at the speed of when a hedge fund or institutional fund can do it. I think it's a major, major advantage, because one thing to remember is institutional level trading, full stop. Sorry, just got a thing on my screen here. Remco 100%. That's a whole other conversation too. But yeah, Chris, like, I think for sure there's an advantage that a retail trader has that I'll speak to real quick that for sure institutional traders don't. Whether it's a hedge fund, a private investment firm, institutional traders, etc., they have to move that oil rig, right? They've got to turn that thing. They've got to make sure they're going to go and double check that. They have to check with their analysts. They have to then do a write-up so they don't have SEC issues, right? They have to be able to back up why they're making trades. If you can look at data in real time, and I'm not talking about like the most granular level stuff here. I mean, like if we can find a small 1%, 2%, 3% advantage over the market when it's near term based on real term data, I think statistically that's going to perform absolutely in a stunning way from an arbitrage perspective. In fact, like I'm getting excited thinking about it now. Probably going to spend the next 4 hours working on this. Like this is a really, really big deal. It's just having the ability to understand something about the data that's a correlation that no one else sees. I like to think of it from the standpoint that we all have the same levers, knobs, and buttons when we look at the markets, but the one who can pull in the extra piece of data and analyze it in just a slightly different way, maybe it could be a huge thing. In my younger days, when I was really learning how to do proper technical analysis, one of the things I would play with incessantly is I would overlay SMAs, which are simple moving averages, with EMAs, which are exponential moving averages, right? I would overlay them and then really, really tweak, turn, and play with the different stacking of numbers, right? So like a 15, a 30, and a 200-day moving average. I would try to see if like, what if it's a 14, a 15, a 200, or a 13, and a 52, and a 200, right? Like really getting to the weeds and modeling out what advantage that gives me. And the reality is a lot of times it may not be much, but if you also can do that, find the right arb between different markets, like, you know, yeah, so Shabari for sure, but I'm talking about in like 1999, 2000, when those things weren't available. I would love actually for you to do something on that, explain to us what you're seeing out there for APIs. I have a buddy who does it via Google Sheets with a live API feed to different networks. But it's just a lot of work. And then the problem is it's still not quite real time. Like, I don't know if a lot of people realize this, but in the basement of the New York Stock Exchange is a massive, massive data center. And the reason there's a data center in the basement is because financial firms rent that space and rent space to put their own servers. And this is really cool if you don't know this, and if you're not in the world of data, you might be like, this guy's the most boring dude ever, or you're gonna love this. The reason they literally put the servers in the basement is so that the cords that, like, you know, I plug this cord in and it's got to run from New York Stock Exchange to my office in Boston. Well, that might be a millisecond faster to get to Boston than it is to feed that server where I have an algo already set up to trade. So by the time that millisecond has passed and my system picked up the trade signal, another system's already taken the trade signal, acted on it, and now will profit on my trade by taking it back. So we're at a level now where statistical advantage is to the millisecond of data analysis acting in real time with pre-built and if or then machine learning instances that are built in, right? Like It's absolutely Shabari, I appreciate that. Absolutely amazing, this technology. And like, I count myself lucky to have seen a lot of these different service centers and the way they work. So that's my really long diatribe as to why, yeah, there is a massive arbitrage opportunity, whether it's how long your cord is from your server to the floor, or latency. Exactly. Jay, thanks for calling that out. I was like, in the back of my mind, I was desperately trying to think of what the word I want to throw out there was. Latency, even down to fractions of a second, can be the difference between winning 1,000 times a day or breaking even 1,000 times a day. So look, guys, I actually love this conversation, and I'd like to do this actually way more in depth. So, Shabari, Chris, anybody else, like, would love to do this with a group of folks to really talk about this stuff. Oh, Jay, great call out too, man. I know the days of clicking my stock prices, I'm gonna lose my term here that I'm thinking of, but trying to get that stuff is going to be tough. I will say, just on the note, because I always find myself going back to Palantir because I like what they're doing. Near orbit satellites, I won't go into the details on this, but just think about the fact that, like, we have AI now that is kicking off real-time sensor-based analysis that can help satellites to move into position in orbit to make sure that they're fully covering something. Think about that from like an on-world perspective, right? Not off Terra, so to speak. Like, you can look at financial markets this way. You can look at any market this way. I know Chris talks about this a lot as well. Chris Patel, who's in the chat here, you should definitely check out. By the way, I'm going to call it out. Chris Patel and CyberFam, their channels are awesome and really go into the details even deeper than I do. So you should definitely be checking out those channels on here. But Jay, I love, before I call this a day, which is going to be probably about 30 seconds, what were you hearing around that orbit satellite piece? If you can put it in the chat, I'd love to see your take on it. I really haven't looked into it all that much. But I get excited when I look at the way we're not only analyzing data, but fixing for latency, and then the speed of which we can then perform that analysis and create that action or that execution call directly from it. I think it's super interesting. But with that, and Jay, sorry to put you on the spot, feel free to just throw in the comments below. But I appreciate everybody watching. This is really just sort of a casual day where I have nothing else to do today. And, I was thinking about some of these things as I was out with my wife for lunch. Like, we're missing the boat on so much because we're very focused on ensuring that we take our profits and drive them into cars and into our clothes and into looking cool and taking vacations that are just a waste of money, right? Like, first class seats instead of commercial, just so I can feel good on a 3-hour flight. Like, come on, that's absurd. AJ, yeah, shaving microseconds off transmissions. Exactly. I mean, it's literally the difference of profit and loss. Now that's what you're competing with. Marcus, really appreciate that. Thanks so much, man. Yeah, probably went a little bit of a too much drivel without an agenda today, but I still appreciate it, man. Really thank you. And no, CyberFam, it's not true, because your kids make an entrance into your videos way more than me. Yeah, and Jay, you know what? I will agree too. Like, I think about this in terms of, I don't mean this to be funny. I know I keep going longer than I mean to go here, but like, I don't mean this to be funny when I say this, but it comes across that way. I talk about a 1 or 2 or 3% advantage in arbitrage around data with financial markets. But to your point, like, being able to knock latency off for things like the medical industry during a surgery, tracking real heart rates, real monitoring of blood pressure, et cetera. Now we're not talking about a 1% advantage in the markets. We're talking about near-term life or death understanding of the ability to execute and save lives, right? Or warning signs for defense, or, energy issues before they happen. I saw a great, actually, Chris, it might have been Chris Patel in the chat. I think it might have been with Manny, who was on your channel recently, talking about sensors within natural gas pipelines to recognize increasing pressure before there's a risk of explosion, and having something automated to take action on that. This is where that real-time transmission, latency, and reduction of time is such a huge thing. Yeah, I love that, right? Vegas makes billions of dollars off of a slight annual edge. It's amazing. All right, team, I got to get the kids off the bus before I get in trouble at home here. I really, really appreciate everyone watching. You know what I really appreciate too? Do something for yourself, right? Like, stop wasting money on stuff you don't need. I get the feeling, though, if you're watching this, you're probably like me, sitting here in a hoodie and on a Friday afternoon trying to take it easy. Like, keep learning, keep doing this stuff. There are so many cool topics that are out there, like latency, like real-time shaving, like statistical analysis, things that will provide an arbitrage opportunity. They'll give you an advantage that no one can compete with. And I mean that head to toe, complete honesty. Like, I think this is what the future is going to be for retail traders. And even more so because retail has become such a powerful force in the markets, not because of the amount of wealth, but because of the speed to action. That's the driving piece. Everybody, thanks so much for watching. Really appreciate the love. Appreciate those who hit the like button, but never feel like you have to. Thanks for being here. Thanks so much. Have a good weekend, and we'll talk soon. Thanks, everybody. Good hunting out there.